Hello everyone, this is Charalambos Pissouros, Senior Analyst here at IronFX, bringing you the technical updates for the 19th of July. Today I would like to describe the technical picture of Aussie dollar, which tumbled after the RBA meeting minutes were out. I would also like to talk about sterling yen, which hit resistance at 141.25 and slid somewhat. So let's get the ball rolling with the Aussie dollar currency pair. Aussie dollar tumbled during the Asian morning Tuesday after the minutes of the latest RBA policy meeting left the door open for further easing as early as in August. The pair fell below the support now turned into resistance barrier of 0.7570 and below the lower bound of the upside support, the upside channel that has been containing the price action since the 27th of June. Then it fell below 0.7525. In my view, today's slide has turned the short-term bias negative, and as a result I would expect the bears to maintain their momentum and set the stage for extensions towards the 0.7470 support zone. Our short-term oscillators detect negative momentum and amplify the case for further declines. The RSI fell below 50 and is now headed towards its 70 line, while the MACD already below its trigger line has turned negative. As for the bigger picture, with no clear trending structure on the longer term time frames, I prefer to adopt a neutral stance. I would like to see a decisive close above 0.7720 before I draw any conclusions about a longer term uptrend. Now let's carry on with sterling yen. This pair traded higher yesterday, but during the Asian session Tuesday it hit resistance at 141.25 and turned down. The fact that the rate is trading below the prior upside support line taken from the low of the 8th of July makes me believe that the pair is likely to continue trading lower for a while. I would expect the bears to challenge the 138.10 line soon, where a decisive dip could aim for the next support area of 136.40. Our short-term oscillators corroborate my view as well. The RSI turned down and could be headed towards its 50 line, while the MACD, although positive, stands below its trigger line and points down. There is also negative divergence between the RSI and the price action. Today the IMF publishes updates on the world economic outlook, including the UK growth forecasts. A significant downgrade of the UK estimates could hurt the pound and could be the catalyst for further declines. Switching to the daily chart, I still see a longer term downtrend. Therefore I would treat the 6th until the 15th of July recovery as a corrective phase, and I would expect sellers to take charge again in the foreseeable future. So that's it for today. For more analysis and charts, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.